Order filled. Order filled.
80, 70, 60. All right, while we still can, let's get all the position that we want on it. That's what we're looking for. I'm becoming very frustrated with being stopped out on this attempt. All right, so we are looking to get a successful Libra trade here. Move. We are oversold. We have an imbalance. This is all in the 1 minute. Higher time frame objective is additionally up top as well. It's on buy side liquidity. So we are oversold, looking to get in this and watch it zip line up through these levels. So at this point, I would be looking for a straight shot to at least the 50% and probably the 62% as well. So I'm gonna try to. We have a free trade. It's we have a break even in place. So I'm gonna try to just hold until hold right at break even until we at least get to the 50%, and then probably drag the stop up to like the 23%. Oh, we have a very bouncy market though. I could also just get like stopped out, so we'll see. We have a free trade, so we're just gonna be patient. Give it time to give us, the fuck am I saying? Give it time for the market to give us what we want. And I'm in a state of greed, so I'm not moving this stop until we get to 50% because I'm gonna need all that profit. I'm gonna need it all. You know what I mean? I know you know what I mean. Yeah, baby, we got that Celsius drink on deck. Y'all. All right, we're almost there. We're looking for 38%. Let's see it. We have this imbalance here that just formed. We're not even going to worry about it. We're not even going to worry about it. We're going to expect the market to continue to zip line up. I know what you're thinking. You're like, well, look at this channel that you've drawn. Look, fuck that channel. We're not worried about that. I promise you we're not. We're looking for the market to move up 78% minimum, but most likely, because this is what Nasdaq does, Nasdaq's going to break rules. Nasdaq's going to go right into this area right here. It'll probably go all the way up here, and then after that, we don't really care what it does. To be quite frank with you, we don't care. Okay, I don't care. You know what I mean? Do whatever you want to do after that, Nasdaq. Alright, I'm trying to make this a super quick one, so I'm going to explain this while it's actually happening. Alright, we hitting the 50%? Are we hitting the 50%? Yeah, let's go! Okay, stop drag. We're locked in at 1476 on the trade. Alright, cool. So we hit the 62%. Usually we'll come down. We'll come down usually on the 62%. However, we're so overextended right here that I kind of think that we're just going to move right through. And I've seen Nasdaq do this a couple times today. It surprised me. And you know, usually what I'll see with Nasdaq is like when it gets on like a certain behavioral pattern, you'll see it you'll see it play out multiple times in the day. So my presumption is that we're actually, instead of rejecting hard here, I think we're gonna hold and push through to the 78%. I could be wrong. Normally we do reject at the 62%. We come down all the way to here, and then we move back up after that. But I think because we're so oversold, I think we're gonna see it move up. Where is I'm just in a mood. I'm in a mood to do like some fucking some silly shit. I don't want the last part. Can we get rid? fuck? You see, I'm not good at the arrows. That's fine. That is kind of what I expect, actually. Rather, though, I kind of more so expect it to hit, like, here. And then do, like, a... Clearly, I don't know how to use this tool. This is helping to keep me from being distracted. Oh, it only has so many points. Maybe this point can be dragged up. Oh, we're learning. We're learning. And then I'm just kidding. I really don't know. But at least a small pullback. Alright, cool. So we're trying to hang in there. We're pushing. We're going to lock in at the 38% level right here. Locked in at 1988. We got $1,988 locked in on the trade. I'll be honest with you. This is a bit impulsive for me to move my stop right here. I really don't want to be here. I shouldn't be here. I really should have just waited. Because we're at the 62%. And even though I do kind of think that we have the momentum to continue moving up, it's just more typical that we'll do a move down. But, I mean, whatever. We're locked in at 1988. But we trying to get that 37.48, you know what I'm saying? Y'all, actually, I expect this to happen, so we're just going to lock in at 41.48, actually. Am I in a state of greed? I told you. Yeah, I am. Okay. It is what it is. We're here. We're here. Alright, I said I was going to explain this trade. Basically, what we're seeing happen here is, I don't know. I don't know if I can show you while we're in it, because then I gotta go to the other screen, and then it's just kind of... We're gonna lock in. We're gonna lock in 50%. We've almost hit that 78% right there. Oh, don't you steal from me, Nasdaq. Don't you steal from me. As soon as this is over, we'll go over it in just a minute. We gotta lock in real quick here, right? Don't you rob me, Nasdaq. Don't you do it. Give me that straight shot. We want to go up. Yeah, do it to him. Yeah. Nasdaq, you're looking gorgeous today. If no one's told you, you're fucking beautiful. Are Celsius drinks giving me fucking throat cancer? Like, I don't know what the fuck is going on. No, I see you trying to pull back on me. I don't accept that. I don't accept that. I think we still look good for the move up. We still look good for the move up. You got this, Naz. You got this. Okay, I'm probably just being impatient, but it feels like this is taking forever, so I'm going to go ahead and just kind of explain this trade. I have coined this move the Libra. It is called the Libra because, you know, the Libra represents the scales of balance, and I am a Libra also, so of course it's a little egocentric, but here we are. So basically, this move is based on the market getting oversold. Oh, we hit the 78%. We're locking in, we're locking in, we're locking in. You know what, let's go just under the candle, just under the candle. It's because I'm greedy, and I want to see it hit up here. I want to be in there, I want to be in there, I want to be in there for that. So basically, this is based off the market becoming oversold or becoming overbought. You can do this all in the 1 minute time frame, and you actually don't need additional confluence. Honestly, you need a fair value gap to form. You need the market to be oversold or overbought, and for it to need to move back in the direction of where the 78% level would be for the imbalance, right? And this is based off me watching Nasdaq move, you know, just incessantly watching Nasdaq and looking to see what it does, just watching like a psycho, and just seeing that Nasdaq doesn't like to let gaps go. When Nasdaq creates a short-term imbalance, it wants to close it. and it does this very frequently. Like, I don't want to say very frequently, it almost always closes all the gaps. Nasdaq will get to a point where it becomes exhausted and it'll start to get more in sync with a higher time frame move. That's when you'll start to see Nasdaq leave imbalances behind. Don't do that. Go ahead and give me that 4K. Give me the 4K. Pause. Hold on.
Order
okay. Like I was saying, Nasdaq wants to fill all of its holes, okay? Christy, I know you appreciate that line. So Nasdaq does like to fill all of its holes. So if you look at the 1 minute time frame and you just study price action, you will see that when Nasdaq creates imbalances, it almost always goes back to fill those imbalances. So let me give you a scenario, okay? Market's moving up, it creates an imbalance while it's moving up, so we have a bullish fair value gap. And then the market continues to move up and it leaves that imbalance behind without filling it. Okay. It leaves that imbalance behind without filling it. Okay. So then sitting down here, you have a imbalance, you have a fair value gap. The market continues to move up, right? This is all in the 1 minute. It becomes overbought. One of the easiest ways to identify this is literally just looking at the stochastic. You look at the stochastic becomes overbought. You take an entry to short it back into 78% of the imbalance. So I just gave you an example. Oh, hold on. Do we have another one? Fuck, I missed the entry. How greedy am I? How greedy am I? Hold on. I'm sorry. I apologize. Give me a moment. Oh no, we didn't get outside of the okay, I'll pass on that one. Okay, no, it's not as clean as it could be. Resumption. Okay. Follow me. Okay, so market becomes overbought. We have a fair value gap. We have an imbalance that was left behind. When the market becomes overbought, you short it into 78%. I like to go sometimes all the way to like 100 because I know what Nasdaq does. Nasdaq doesn't respect anything. Nasdaq is just Nasdaq. So Nasdaq will run through the 78% level and typically will hit 100% on that retracement. And I think I explained this before in a video, but if you watch the way Nasdaq typically trickles into imbalances, what you'll notice is usually Nasdaq will hit the 38% and then it'll come, it doesn't usually pull back this deep again, but it'll hit the 38%. It'll at least get down to your zero level, right? And this is just based on you running the fib on the 3 candles that will create your fair value gap. Okay, so it'll hit the 38%. It'll pull back to this level at least, and then it'll make a run up. And typically you'll see it hit the 50% next. Sometimes at the 50%, it'll pull back again, but sometimes it'll run through and it'll keep going until it hits 62%. Usually when it hits 62%, somewhere between 62 and 78, it will do another retracement. Usually we actually see a much bigger retracement than this. You'll usually see after it hits 62%, we'll come all the way back down to this level right here. And then the market will make another hike and hit 78%. sometimes a small little move back down, and then it'll run up to this level right here, your 100% retracement to that very top candle that started the formation of the fair value gap or imbalance in the first place. That's kind of that is the Libra strategy in a nutshell. It does not, anytime you're trading with the trend, you're always going to have better odds and typically a more smooth trade. But you actually don't have to trade you don't have to trade this with higher time frame confluence, because within like this very minuscule internal structure, the market is going to do all of these different things, and like in the 1 minute you're going to constantly see Nasdaq just look like it's chasing its tail. It's always filling holes. Pause. So that's basically the strategy in a nutshell. Anytime I explain strategies that I like to use, my hope is that you don't just run into the market and just like try it with like, real skin in the game. Like, if you're interested, just back test it. But like, it's a really good strategy because it's constantly playing out. And you don't have to, it avoids the situation of like having to like sit in the market for hours and hours and wait for like this perfect, really big move. And usually I will start out with a 20-point stop, right? And within that 20-point stop, I'm respecting whatever my max risk needs to be. And then if the market respects a 10-point stop, like if it doesn't move more than 10 points below my entry, I'll add to it. That's just what I like to do. That's just how that's how I've been playing it. I'll add to it, and then, just let the market run. And then it's like almost as soon as you get into profit, you can pretty much add a break-even stop, because you want to see this trade play out like the market getting sucked into a vacuum. And if it's not moving with that kind of velocity, you don't need to risk anything. So get a break-even stop super early, and and let it run. And I would say too, like, it's a good scalping technique. You need to be like holding trades through a lot of volatility is more of like, you need to have some like good experience. You need to be very comfortable in the strategies that you're using, and just very comfortable with trading and comfortable with risk. So I would say if you're not that comfortable with risk, you'll probably want to take this trade and probably get out at 50% retracement. And the reason I say that is because a lot of times it will hit the 50% and it's going to pull back before it moves up again. So if that makes you antsy, if that makes you like, oh no, like you're anxious, you can't handle it, it's hard for you to hold that, just take it to the 50% and then, get out of the trade, and then you're done. If you're like a sniper, you can like take it to the 50%, let it pull back to the 0, enter again, hold until the 62%. Like you could literally get like 2 or 3 trades out of this sometimes, most of the time actually. But anyway, that's the Libra. I hope you enjoyed it. I certainly did. That was it. That was a good trade. If there was ever a trade that I patted myself on the back for, good job, self. Good job, self. I think that's the last one for the day though, because to be honest with you, like the Libra is great on like tricky days and on days where maybe you feel like you should be scalping. Christy. So I like this strategy for today because I don't like the way the market is moving, like generally speaking. I have my higher time frame premise, but the stuff that it's doing in between just moving to that premise is really annoying. So I like to go through my little checklist here, and I want to take a power of 4. I want to take a power of 4 if it presents itself as the first thing that I do. And if I don't see a power of 4, then I want to look for a continuation trend. And if the market looks like shit, or if I just don't have an opportunity to take either of those, then I want to take the Libra. And the Libra, honestly, I mean, the Libra can be traded on any given day, but it's best used for days like this where the market is just kind of like pulsating everywhere. All right, that's it. I'm all worn out. I'm all tuckered out for the day. It's 8:25 Mountain Standard. It's 11:25 New York. Okay. So I hope I explained that sufficiently enough. And I'm gonna real quick for the visual learners. Let me just give you a is that my 1 minute? Let me give you the full visual representation of what I was just talking about, of the Libra, and we're just going to use the exact example here. All right, so let me make sure we're in frame here. Yeah, nice and big. Pause. Okay. Cool. All right, so this was where our entry was around. Okay, so the first thing that needs to happen is an imbalance has to be created, right? Right. So right here, this candle gave us our imbalance right here. Okay. I'm going to be very visual for the visual learner here. So if we're going to draw out the fair value gap right here. There it is. Okay, that's our fair value gap. Okay, and then, so we have a fair value gap that got left behind. We can see the market comes down, right? Okay, so the market comes down and leaves the fair value gap behind. Okay, so then what we're looking for are opportunities for the market to get to become oversold in this case, because we're going to long it, right? Because we're going for that buy side liquidity. Okay, so we have an opportunity right here. You could have gotten in right here, and personally, I like to get in. I'm sorry, hold on, I'm sorry, wrong order, my bad. Let me run the fib on it first. Okay, so we have the imbalance, and then you want to run your fib on it, okay, because it's more so about it retracing into these levels than anything else. So I'm gonna make this really, really big. I just want to make sure you can see this very clearly. Okay, so you know that the imbalance is here. I'm just going to move this a little bit so it's not in the way of our fib. Okay, so you can see the levels. So we have the 38%, 50%, 62%, 78%, 100% retracement. Okay, so imbalance created, market moves down. Okay, personally, I want to see it get outside of the Bollinger Band. And if we can get outside of the Bollinger Band and become oversold on the stochastic as well, that is the most ideal scenario. So right here, you have an opportunity, and you see how the market moves up, but it doesn't hit our 78% objective. That means that you have an opportunity, if it returns back to being oversold, to get into it again. Because the market is going to continue to be drawn to this area until it fulfills this level. Okay, so if you had gotten in right here, which you could have, right? We want to try to target outside of the Bollinger Band. So you could have gotten in here, and we're going to put a template on for a 10-point stop. Okay, and again, I would recommend for people who are antsy about getting out of, about holding positions, you can target the 50%, and you don't really have to worry about it, whether or not it hits it, right? Because as soon as you start to move into profit, you're going to add a break-even stop. You're going to eliminate risk immediately on this trade. Always, okay? So you're always going to have a break-even stop right away. So we get in there, break even stop, we start to move up through the levels, okay? Once we get to 38% right here, the yellow line, you can move your stop right here to the 23% level. In this case, if we had moved up from 38% into 50%, once you hit 50%, you can drag it up right here. And to be quite frank with you, you can move your stop up however you want. And in these scenarios, if you don't want to touch your stop at all and you want to just leave it at break even, you can also do that, because the move is it's so often like when you see it playing out, it almost always does exactly what you expect it to do. When you're in the 1 minute time frame is a big component of this, because in the 1 minute, these moves they're gonna complete very quickly and very assuredly. Okay. All right. So in this case, you would have either, if you left your stop in place, you would have broke even, or right, if you were dragging it up through the levels, then you would have hit whatever level you hit. It's still a profitable trade. And even right there is a 3-to-1. A 1-to-1 is right there. A 2-to-1 is right there, right? So on and so forth. Okay. So let's say you just had let's say you trusted it entirely and you left your stop at break even. Okay. And then it pulled all the way back and you broke even on the trade. All right, fine, cool, no big deal. We have another opportunity right here where the market gets outside of the Bollinger Band, and we have an opportunity to get back inside of this trade. Okay. So we're going to get our entry again. So your entry could be, it could have been right here. It could be down here, like whatever the preferred level is. But typically, if I see the market coming back down, then especially all the way back down to like these candles, I'm going to presume we probably want to run this level a little bit. So at any point, once we hit right here, you can get back in this trade. Okay. Outside of the Bollinger Band, right? We've run this level and now we're very oversold and we're going to let the market move back up. So so however, you can start out with a 10-point stop, you can start out with a 20. We're just going to use, let's use the example of a 10. Because even when I start out with a 20, I'm looking to see if it respects a 10-point stop. And if it does, then I'm going to add to the position before we get, back up above my entry point. Okay, so we have a 10-point stop here. And our target, again, well, your target, if you're going to be more conservative about it, is going to be 50%. Okay, so as soon as we move into profit, break even. As soon as we move into the 23%, that's great. We move into 38%. We're going to put our stop right here. Okay, so right here. And in this case, you would you have been? Yeah, you would have been stopped out. So that's all you would have gotten. And so in that case, if you stopped out right there, then you would have gotten a 3.2 to 1 reward to risk. Now, if you are able to trust the trade more and just let it go, right? And you just keep your break even on and you leave it at our target right here, 78%. If you did that and you just left it at break even, or you gave it a little bit more room to breathe, then you could have gotten a 6-to-1 reward to risk out of this. Now, if you're comfortable, if you're really comfortable knowing that Nasdaq is going to ultimately push up to this level, you can target this level. But you got to be real comfortable and feel real sure for that. So there's kind of, within this strategy, there's kind of different levels to it. You know what I mean? Okay, so that's it. That's the trade. And then once it hits and you're out. So in this case, if you waited for the ultimate level, I mean, it looks like you would have pretty much hit it in one shot anyway. There was just 2 1-minute candles that did very tiny pullbacks. Okay, so that's the visual extended version of the breakdown of the Libra. So hope you like it. Hope it gave you a decent trade idea to backtest and see how you feel about it. All right, guys, you know what it is. It's my nap time. I will see you next time.